Hello, everyone. My name is Ari from Nefesh B'Nefesh, and I will be hosting the webinar today on Aliyah dollars and cents. I am joined by two experts in the field, Ellie Cole, CPA at Expat Tax Services, and Aaron Janogli, Wealth Manager at Pioneer Wealth Management. Today's webinar will be presented as a frontal presentation. If you would like to ask questions, please use the question and answer button in Zoom on the bottom of the page. We will be recording today's webinar, and it will be available on the Nefesh B'Nefesh events page in a few days. Contact information for Nefesh B'Nefesh, Ellie, and Aaron will be shown at the end of the presentation. At this time, I turn the presentation over to Ellie to begin.
Thank you, Ari. As Ari mentioned, definitely please use the Q&A, not the comments, for any questions you have. When I finish my part of the presentation, hand it over to Aaron, I'll probably go back and answer most of the questions we have. So I will get to them, even if not right away. Additionally, and probably most importantly, at the end of the presentation, we'll share mine and Aaron's contact information, which you should use to ask us if you have any questions, or just send us your contact information if you want to be added to our listservs. As Ari mentioned, neither me nor Aaron work directly for Nefesh B'Nefesh, even though we do a lot of programs with them. I'm a US CPA. Aaron is a wealth manager. We each have separate companies, and we're here to help you out with questions you have pre-Aliyah, post-Aliyah. And feel free to be in touch with us directly, as well as during this meeting. We'll try to cover what we can. So the name of the presentation is Aliyah dollars and cents. And really, that's what we're trying to focus on here, is just the dollars and cents, the nuts and bolts, the nitty gritty about making Aliyah. We're going to talk about a bit more numbers than usual, and really just trying to get the idea of if you've decided you want to make Aliyah, or if you're thinking you want to make Aliyah, as long as you can afford it. We're going to attack that aspect of it, of the can you afford to make Aliyah? How will you live financially in Israel? What will your finances look like after making Aliyah? So to do that, we kind of touch upon, for starters, kind of the two different sides of things, which is how much you earn versus how much you spend. Cash coming in, cash going out. Obviously, you want cash coming in to be higher than cash going out. As an accountant, I call it income and expenses. So we're going to look and try to consider if you're going to make Aliyah, how much money are you earning versus how much money are you spending. So as far as spending money, one thing good to always do is to make a budget. A lot of families already have budgets when they're living in America. And it's a good idea to make one coming to Israel as well, to consider the differences in your expenditures after making Aliyah. So there's a real nice information here that Nefesh B'Nefesh put into the slide, and I suggest people, it's recorded, you can take a screenshot, you can go back and look. There's for a couple and for a family of 6. These are really just rough estimate numbers, but they'll give you a picture to get an idea of what your budget should look like, what kind of expenses you have. And now you have to tailor these expenses for your own personal life, because obviously something like a rental expense, rent could be a lot higher when you make Aliyah, a lot lower when you make Aliyah. If you currently live in New York City and you're making Aliyah to Beersheba, your rent expense is going to go down probably when you make Aliyah. Whereas if you currently live in Detroit and you're making Aliyah to Tel Aviv, your rent expense will probably go up. So you need to look into each of these with what your reality is, but it's a good starting point to give you the categories of what you need to budget and give you a framework for how much you should budget for the various expenses. Then there are a few things just kind of to highlight as far as the main differences between living in Israel, living in America. As far as the big savings when you are living in Israel, we have healthcare, significantly cheaper when you were living in Israel. Telecommunications, cell phones, internet are typically cheaper in Israel, as well as public transportation, which is pretty common in Israel, depending where you live, to get around, to get city to city, and much cheaper as far as forms of transportation. Also not listed here, but for young families, of course, child care specifically education for children, as well as university tuition, significantly cheaper in Israel versus America. Some of the expenses that will increase when you make Aliyah could be housing. Again, check depending what city you're looking to live in, but housing could be very expensive relative to where you're coming from, depending on the city you're looking to move to. Transportation, if you're looking to buy a car or multiple cars, cars are very expensive in Israel. The upkeep of cars, the price of gas, all very high costs that you need to consider, which could drastically affect your budget in Israel versus in the United States. And also shipping costs, or we call them moving costs. If you're going to send a shipment of all of your things, there's a big cost for that. If you're not sending a shipment, you have to buy all new things. So there's a cost to that. So you want to kind of keep in mind all of the expenses that you're going to have when you move to Israel. The flip side of that, of course, is income. How much money coming in are you going to have? So what are your different income sources? Do you have any passive income, any investments already, as well as what is your active income? Do you have a job from the US you're bringing with you? Are you looking for a new job? And if you're looking for a new job, what can you expect to earn? When we talk about how much you're earning, it's not just the amount you're getting paid, but how much you're actually taking home with you. What is your after-tax income? Trying to understand an Israeli payslip, because also an Israeli salary, which often sound much lower than US salaries. In some ways, they just are lower than US salaries because the standard salaries in Israel are lower than US salaries. However, when you're getting paid by an Israeli employer, as an Israeli employee, there are typically more benefits than you get in the US. Pension, severance pay, sometimes something called Keren Ishtalmut. There's different things you might be getting, which might make it, you might think that what you're actually earning is much lower than the US, but it might be that you're earning more than you realize you're earning. Like I said, we'll talk much more about this. We have to look at the taxation side of things as well, how much you're earning actually after tax. And then OLE benefits. When you make Aliyah, you get certain benefits, certain sometimes subsidies, sometimes grants, and then there's Sal Klita, which is just the money that Israel gives you when you make Aliyah. So I mentioned that you have to look at your paycheck to see how much you're earning, and there's also a thing called it's netto or brutto. You'll hear this a lot of times. You meet with an employer or a prospective employer, and they offer you a salary. They say, I'm going to pay you 20,000 shekels a month. Great. Is it netto or brutto? Is that what they're paying you after taxes, after pension contributions, after all of your expenses, or is it brutto? Are they saying 20,000 shekels is coming out of my pocket? What you're getting is the bottom line would be significantly less. So you have to understand kind of the two differences, because there are a lot of benefits and other, pension and other costs that the employer pays that comes down the line to eventually, but won't come into your pocket today to pay for your living expenses. Now, Nefesh B'Nefesh put in a really nice 3 slides here that I really suggest, again, you kind of take screenshots of them, you look them up later. This is really interesting, just different professions and what to expect as far as salary goes. Huge range. These are estimates, but they put a lot of time into doing some surveys in different fields to give you an idea of what you can expect to earn. Not saying that's what you're going to earn, but what you can hope to earn in various fields. Obviously, some of them are significantly lower than the equivalent positions in the United States. Some are comparable. You kind of have to look at what is best for you to see what is your earning power. Now, the idea is now you have your earning power, what you do, how much money you're bringing in, both from your salary as well as if you have any investments that you have. Then you have to subtract out what are your expenses, your rent, your food, your childcare, all of your transportation, all of your expenses. And they say that equals Aliyah viability. If your earning power is greater than your expenses, you can financially make Aliyah. However, this leaves out one very important piece, which I'm going to spend a little more time talking about, which is really its earning power after taxes minus expenses equals Aliyah viability. Taxes is a critical component, as we know, living in America as well. Really, what your salary isn't what matters. It's what's your take-home pay, and as well as with your investments. If you are earning rental income or dividends, it's not what they're paying you out. It's what's coming home in your pocket that we have to consider. So that brings me to kind of the next part of the presentation, which is the tax perspective of it. I'll give you an explanation about the taxes, and then Aaron who's a wealth manager, will explain as far as how to manage your assets, how to handle your finances when living in Israel. So my name is Eli Cole, originally from Columbus, Ohio. I made Aliyah about 11 years ago. Before that, I was working at Ernst & Young in New York. Since I made Aliyah, I've mostly the whole time, more or less, been preparing individual taxes. I'm a partner in Expat Tax Services. We're an accounting firm that specializes in filing U.S. taxes for Americans living in Israel. I'm a U.S. CPA, not an Israeli CPA. I'm not an Israeli accountant. I can answer a lot of Israeli tax questions. More complex Israeli tax questions are referred to an Israeli accountant. But I can give you a general framework for what issues you have to keep in mind, both for U.S. and Israeli tax, and then go into kind of the details on the U.S. tax situation. So, kind of three components I like to cover as far as making Aliyah in taxes. The first part, which is usually the most surprising to people, is U.S. taxes. And why do we care about U.S. taxes? People think, I'm moving to Israel. Why do I have to still file U.S. taxes? And the answer is, you do. You're in America. We'll get to why, but you still have to file U.S. taxes. The fact that you're leaving America doesn't mean you're leaving the American tax system. Second part is going to be taxes in Israel. You're now an Israeli, so what taxes do you have to pay to Israel? And then I always say who you are matters, and that's really the most important component of this whole thing. So try to give a very general outline, but as I said at the beginning, they'll be in touch with me directly or Aaron directly with his questions, because a lot of these financial matters really are personal, and you should really be in touch with us one-on-one to understand what it is that you're planning, what your situation is, and we can go over and help you kind of personally. So step one is why do I still have to pay U.S. taxes if I'm no longer living in the United States? And I get asked this question daily, often from people who are never even been to America, who might not even speak English. They'll just say they're U.S. citizens because their parents were U.S. citizens, and they'll have to file U.S. taxes, and they'll say, why do I have to? The simple answer is it's the law. The United States has what's called a citizenship-based taxation system. What that means is, as long as you're a U.S. citizen, the United States requires you to file U.S. taxes every year. Filing doesn't mean paying taxes, but you need to report on your worldwide income every year to the United States. You might leave the U.S., have nothing to do with the U.S., have no U.S. bank accounts, no U.S. address, no U.S. driver's license, but as long as you hold U.S. citizenship, the IRS expects a tax return every year reporting your Israeli salary and any other income you have worldwide. Not only do you need to file a U.S. tax return, you most likely have to file what's called an FBAR, foreign bank account report, as the U.S. government wants to know not just what you're earning, but what you have. And you have to submit a report showing them the balance in all of your foreign financial accounts. You have to submit how much money is in your Israeli bank account, how much money is in your Israeli pension and any other Israeli investment accounts you have. Now, the FBAR is not a tax calculation. You don't pay tax because you have the assets. However, you do need to disclose all of these financial accounts to the U.S. government. Then we have Israel. Israel is, we said the U.S. has a citizenship-based taxation system. Well, Israel has what's called a residence-based taxation system. So you only have to really report taxes to Israel if you're an Israeli resident. However, I assume if you're making Aliyah, odds are you're going to be an Israeli tax resident. Sometimes people have split Aliyah, try to stay under the days, and those are conversations we should have separately because it's a kind of unique situation. But in general, Israel says you are an Israeli tax resident if your center of life is Israel. Center of life is a qualitative term. Again, sometimes it's gray. But generally speaking, you're making Aliyah, you're moving yourself, your family, you're living in Israel, your center of life is going to be Israel, and you're going to be an Israeli tax resident, and you're going to have to file and pay taxes to Israel. So we are a U.S. citizen, and the U.S. has citizenship-based taxation. We're an Israeli resident, and Israel has residence-based taxation. So at best, we're filing a lot of paperwork, which is kind of best case scenario. Not doesn't mean we're paying a ton of tax, but if nothing else, we have to report to all of the countries and share all of our information. There's no more keeping a hidden Israeli investment account that US doesn't know about, or keeping a US trust that Israel's not going to know about. Eventually, everything you do in both countries are going to want to know about. Then comes really the interesting part, which is paying taxes. So fine, you have to file taxes, you have to tell US and Israel all of your financial information in both countries. But are you going to have to pay tax? Or how much tax are you going to have to pay? And again, case by case, we'll go over specifics individually, but just to give a summary, both countries have a few different tools to try to, I guess, minimize the burden, give you some benefits as far as taxation goes when you're a U.S. citizen living in Israel. So from the U.S. side, there are three main things I like to focus on. The first is the Foreign Earned Income Exclusion, Form 2555. The Foreign Earned Income Exclusion says that the first $100,000, a little higher, of earned income that you have outside of the United States is exempt from U.S. taxation. So you move to Israel, you get a job, you're earning $100,000 a year from an Israeli employer. That $100,000, you could say, I'm earning $100,000, subtract it out from my tax return, because the first $100,000+ is excluded from U.S. taxes because it's foreign earned income, because you're earning it from while you're living and working outside of the United States. So that's one very helpful tool to remove income tax from the U.S. on salary that you earn when you're living outside of the U.S. Now, it's very important to know that the foreign earned income exclusion, first of all, it only helps you with foreign earned income, meaning salary. It's not going to help you if you have rental income or investment income or pension income. It's only earned income. And secondly, it's only an exclusion for income tax. It's not an exclusion for Social Security tax. So if you're still working for a U.S. employer, or if you're self-employed, either in the U.S. or Israel, if you're self-employed, you'll still be subject to U.S. Social Security tax, even with the foreign earned income exclusion. If you're working for an Israeli employer, then you're exempt from U.S. Social Security tax as well. The second situation is, their second tool is a foreign tax credit, Form 1116. This is the idea of no double taxation. It says if you earn income, income in Israel, you're paying tax on that income in Israel, you can use the tax you pay in Israel to offset the tax you'd have to pay to the United States. So that's another tool you can use to avoid the double taxation. But again, this only helps with income tax, not Social Security tax. And the third tool we have is the treaty, the U.S.-Israel tax treaty. And in some cases, we can take a treaty-based position to exempt certain types of income from being taxable to the U.S. The most common example of this is U.S. Social Security benefits that the U.S. says if you're living in Israel, the United States will actually let you exempt your Social Security benefits from being taxable to the United States. Now, as far as Israel goes, Israel also gives you three tools to use. The first is nikuyim. Nikuyim is like deductions. It depends on your personal situation. When you make Aliyah, you get some nikuyim. Depending on how many kids you have, you get nikuyim. If you're living way up north, down south, certain places in Israel, you get nikuyim. The idea of nikuyim is the more you have, the less tax you pay. Again, everyone's different. We'll have to run calculations for you to get an idea of what your tax situation would be. But that just kind of lowers what your tax due will be. The second is zikuyim. Zikuyim is the same idea as the U.S. foreign tax credit. You're taking a zikuy, you're taking a credit for tax you paid, for tax you've already paid to offset the double taxation. So for example, I said if you have a salary of $100,000 and you decide not to use the foreign earned income exclusion, if you have a salary of $100,000, you pay Israel $30,000 tax. Because you're doing the work in Israel, Israel gets first right. So you pay Israel $30,000 tax. When it comes to your U.S. taxes, you could take the credit. The U.S. says, well, usually with $100,000, your tax due would be $20,000. You've already paid $30,000 to Israel, so you don't have to pay us anything. If the U.S. tax would have been higher, you'd be paying the spread, the difference. But there's no double tax If the tax in one country is 20% and the tax in the other country is 30%, your bottom line will be 30% tax. It won't be 20 plus 30. It might be 20 and 10. It might be 30 and 0, but the bottom line will be the highest tax between the two countries, but not double tax. The last tool I want to mention, which is a very important tool for some people, is the 10-year exemption. When you make Aliyah, Israel gives you a 10-year exemption, or for the first 10 years after you make Aliyah, Israel does not make you pay any tax on non-Israeli income. Now, this is a really, really important benefit that's very valuable to some people, but it's also really important to make sure you fully understand it. The 10-year exemption has a few misconceptions. First of all, it's for 10 years, it's not forever. So if you're making Aliyah and you're relying on a income stream not based in Israel, keep in mind, it's gonna work for 10 years. After 10 years, you'll have to be paying tax to Israel as well. And keep that in mind as part of your long-term plan. Number two, you want to keep in mind that the Israel exemption doesn't mean no tax anywhere. It just means no tax to Israel. So if, just by definition, if it's an income which is non-Israeli based, meaning most likely it's US based, then you will be paying US tax on it. So like it's impossible, people ask me all the time, oh, can I take the foreign income exclusion to get out of US tax and take the Israeli 10-year exemption to get out of Israel tax and not pay any tax? And that will not work because by definition, if you're telling the US it's a foreign income exclusion, then it's foreign earned and Israel's gonna tax it. If you're saying to Israel, no, it's part of my 10-year exemption, well, then it's been earned while you're in the US and it's gonna be taxed by the US. So someone's gonna be getting a bite out of this tax. And the third thing is that people think the exemption includes all income, and that's definitely not true. It only includes income which is derived outside of Israel. So if you have a rental property in the US, if you have investments, stocks in the US, this would all be exempt because it's earned in the US. If you, though, have income in Israel, which includes, this is very important, if you are working for a US employer, but you're physically in Israel when you do the work, that income will still be taxable by Israel. That does not fall under their 10-year exemption. So again, you keep your job with the US employer. Your US employer pays your US bank account. You think, well, Israel has nothing to do with it. That's not true. You're physically in Israel when you do the work. So as a result, Israel has rights to tax you on that income, and you will have to pay Israel tax on that income. So a few just different topics I'm not going to get into in detail, but you just have to keep in mind is that there's various areas where U.S. and Israel taxation does not, I said in an ideal world, there's no double taxation because you get taxed by one country and get a credit from the other country. Doesn't always work because sometimes the countries have different timing on when they choose to tax, and sometimes they just treat taxation very differently. So just some items you want to keep in mind. These are kind of red flags we want to talk about in more detail. Number one is atzma'i income, or it's self-employment income. I kind of mentioned this already, but if you are an Israeli atzma'i, if you're self-employed, or if you're a consultant for a US company, so in that case, you're self-employed in Israel, you'll have to pay Israel mas haknasa bituach laumi. You'll pay all of your Israeli taxes, but additionally, because you're self-employed, you're still gonna have to pay US Social Security tax. An extra 15% tax is pretty significant, and you'll have to kind of keep that in mind with your budgeting on kind of what the bottom line taxes is, because it's significantly higher when you're not atzma'i. Rental income, if you have a US rental property or an Israeli rental property, in either case, the two countries have some special rules you have to look into to see kind of what the bottom line tax will be. Also sale of a property. If you sell a property, sometimes, for example, Israel says you sell a property, we don't charge you any tax. Well, the US is still probably going to charge you tax on it. And similarly, if you in the US sell a property with like a like-kind exchange, Israel probably won't recognize that like-kind exchange and will tax you. So you have to kind of keep in mind both countries on things like that. As you work in Israel, build up an Israeli pension, another type of pension called a keren hishtalmut. As you have Israeli savings, Israel gives you a lot of benefits on pensions, and you have to keep in mind, well, great, Israel gives you tax benefits, but is the U.S. going to tax you, and how will the effect be on that end? Also, education stipends. A lot of times, people will get a tax-free education stipend from a university in Israel. Doesn't mean that the U.S. will consider it tax-free, and the U.S. might tax you as well. And lastly, I warn people of something called a PFIC, passive foreign investment company, which is a really, really nasty tax trap that you can fall into, where it's a certain type of investment which you make in Israel a lot of times, but has really difficult tax consequences in the US. And that kind of leads us right into our own Ginobili, who will kind of take it over from here and explain both PFICs as well as many other kind of tax traps and financial considerations you should have with your investments as you're beginning to keep in mind that you're no longer just an American with your US savings, rather you now are subject to the Israeli tax system, you have Israeli expenses, and just everything to consider with both tax systems in mind. Aaron.
Thank you very much, Ellie. I'm just going to share my screen for my presentation. You should now be able to see. Okay, so firstly and foremost,
before you mute me, I just want to say, sorry, I just jumped in to try to answer whatever Q&As we have. I see there's been a lot of chats and not so many Q&As. So again, I'm probably not going to get to responses on the chats, but if you ask a question inside of the chat and you want to repost it into the Q&A, I will answer the Q&A. I'm not going to be able to answer in the chats.
Absolutely, thank you, Ellie. My name's Ginobili, originally from London, made Aliyah 7 years ago, and live in Ra'anana. Work for a company called Pioneer Wealth Management. We're fully licensed portfolio managers here in Israel. I personally hold the portfolio management license, which is the highest investment license you can receive here. We're also fully licensed by the SEC in the United States, which makes us pretty unique in terms of our size and being dual licensed both in Israel and in the US. Ellie and I will have our contact details on the last page, so please do email us. We will join you to our potential Olim and actual Olim's mailing lists. We won't bombard you, believe me. We probably send maybe 3 to 4 emails a year, but we're also happy to discuss any personal issues or questions that you have on a more personal basis if you feel uncomfortable leaving a question in the chat. I believe there is an option in the chat in the Q&A to ask the question anonymously, so please feel free to do so. I'm going to split this presentation basically into 2 main parts: what you need to think about from an investment and financial planning perspective when you leave the States, and also what it means when you come to Israel, basically. So when you leave the States, and we always put a nice graphic on our presentations, is we can give you as much advice and as much warning, etc. But sometimes with people, you really need to spell things out. I appreciate the majority of the people here are it's called a families planning Aliyah segment. But nonetheless, and I appreciate investments may not be your focus. You're thinking where you're going to live, where you're going to send your kids to school, who you're going to socialize with, etc. It is definitely also a time to pause and have a look at your overall finances to see how you can make them as efficient as possible. So when Americans make Aliyah, there's kind of 5 main issues: your US institution as it is and whether or not they want to continue working with you, your US pension plans. We're going to discuss US mutual funds, and that's going to include the 5th element of PFIC that Ellie briefly touched on. And then finally, and really is going to be the main part of the welcome to Israel, is for those of you whose income is going to solely be US dollar based, you've got to consider what that means, given that your expenditure on a day-to-day basis here in Israel is obviously going to be in shekels, and what the exchange rate fluctuation does to you, and the opportunities to somewhat mitigate that if possible. So the first thing basically, and we're talking here only about investment funds, it's not bank accounts. So if you've got a bank account, a credit card, checking account, that's absolutely not relevant to what I'm about to discuss. This is about investment funds only, basically for a number of reasons, mainly compliance and cross-border. US institutions are set up and only wish to service accounts of clients who are resident in the US, so people who live in the 50 states. Once you move, even if you're you're still American. As Ellie pointed out, you still have US tax responsibilities. Nonetheless, you aren't unfortunately wanted by these organizations. We've put 4 of them on the slide, but there's a lot more. And these are just examples where I think if we do a cross section of the people on this call, probably 80 to 85% of you would have at least one kind of investment relationship with one of these organizations, if not more than one. And basically, the second you kind of give an Israeli address, they basically say, yeah, we can't look after your funds anymore. So that's something I think that's super important that people understand. Your investment accounts and who you can custody them with will very likely change. You do have a number of custodians that are willing to work with American clients who are living abroad, what we call US citizen non-resident clients. Often they'll want a dually licensed portfolio manager, such as ourselves, where we're licensed in the country where you're living in and also licensed in the US to manage your money on your behalf. But there are basically a number of restrictions for these accounts, and it's certainly worth, if you are with one of these institutions, and any element of your funds, so whether it's your own brokerage account, your IRA, your 401k or whatever, please certainly reach out and have a chat. Your US pension plans, so I'm sure the majority of the people here are still working and will continue to work and continue to contribute where possible into these. They have to stay in the US. You can't come to Israel and walk into Bank Hapoalim or Bank Leumi or whichever Israeli bank and say, I'd like to set up a 401k here in Israel. They're US institutions and they're US schemes, and they can't be replicated elsewhere. So they have to stay in the US, and they have to stay with a US custodian. You can open up these in, post Aliyah friendly custodians before you make Aliyah. You can do it just after. It doesn't really make all that big of a difference, but you probably will find it's another thing on your checklist to do, and anything you can do before you come is usually helpful. US mutual funds is a separate issue. A lot of retirement funds in the Fidelities and the Vanguards of this world will have mutual funds in them and in your portfolios. Basically, this is also one of the reasons the institutions don't want you, because their prospectus is set up that they're only supposed to be marketed and sold to US resident clients. It's a big issue for them to have clients who are overseas. Some of these institutions we see will allow you to hold the US mutual funds you already have, but they won't allow you to buy any more. Some will ask you to sell it down. Every institution does its own thing. More and more we're seeing, though, that the institutions are getting tougher and tougher and stricter on this. And that's mainly because they've had such large fines for compliance failings in the past. They just don't want to fall foul of any regulations whatsoever. So what do you need to do for your portfolio? Firstly, definitely you don't want to be having mutual funds in there. You can continue to use ETFs and other trackers. You can use individual stocks, individual equities, so you can continue to hold your Google and your Facebook and your Amazon shares, etc. And I would certainly recommend that you definitely have a conversation with somebody who is dual licensed, simply because your situation as a US taxpayer but non-resident does change your investment outlook and how you need to invest from a tax efficient perspective. For those of you who are coming here to Israel and who are going to start working for Israeli companies, the issue that Ellie mentioned before of PFIX is very, very relevant. A lot of the Israeli pension schemes are set up in this PFIC way, which is basically a no-no for American citizens. It's a very punitive tax charge. It's sometimes even up to 60 or 65% on earnings. It's a real pain in the posterior for your accountant to actually calculate this for you, because of the way it's done. It can add significant cost and time to your accountants, to your annual tax return and to your annual bill, should you pay an accountant to do it for you. So it's really something to avoid. There is some things that can be done that are American taxpayer friendly. In general, the market in Israel is not so developed in that space. But it's definitely something, before you do, your employer will probably not even know that there's an issue with you being an American and putting you in that, because it's just standard for everybody else and for every other kind of, you know, new immigrant. So certainly something to have a chat with your accountant or with a licensed portfolio manager about. For those of you retiring, if any of you are on this call, you still need to continue taking your RMDs. The rules apply the same as they do, and the truth is, for nearly all of the pension schemes, the rules apply to you in the same way as they, you know, once you live in Israel, as they did when you lived in the US. That's the leaving America. Welcome to Israel, and really your first issue is your assets until now have been in dollars, and your expenditure and potentially a future home purchase are going to be in shekels. So you can see here we've put, you know, Maccabi, which is Israel's biggest healthcare provider, IKEA, which is obviously an international and well-renowned chain, Supersol, one of Israel's biggest supermarket chains, and Aroma, which I guess I would loosely describe as our Starbucks, but without quite the same quality. Yeah, as you can see, on the right-hand side, you may have sold a home in the US. You've got your savings, your retirement accounts, and your pensions, which can't be moved because they have to stay in the US anyway. But this is all going to provide you income, etc., in dollars. But obviously, the cost of the day-to-day living will be in shekels. So this is, as financial planners, our job's really to mitigate risk. One of the risks, obviously, is an exchange rate risk. Every time you're trying to bring your dollars in from the States to pay for something in shekels, you're exposed to what the exchange rate is on that day. So I certainly would recommend people come with 6 to 12, and if you're particularly conservative, maybe even 18 months worth of shekels for their month-to-month living, so they haven't got a panic to exchange at whatever rate you know, is being offered on the markets. And it can be volatile. I mean, you can see on this slide, this is the last 7 years. Certainly the shekel has strengthened, so you can compare 2015, where the shekel rate was at before, all the way down to 2018, where it was 3.4. So you've lost basically 15% of your income just on exchange rate fluctuations. There's a big spike in 2020. That spike literally lasted not even 2 days, where it jumped all the way up to almost 3.9, and it's come all the way back down. You can see in the top, if I can put my hand in the top left-hand corner, this was the rate a couple of days ago, all the way back at 3.53. So that's, you know, that's big difference. If you're bringing $10,000, you know, that's the difference between, if you'd have done it 3 or 4 weeks ago at the spike, you've got 38,900 shekel, or if you do it today, you've got 35,300 shekel. So you've lost basically 10% on just the movement, on the currency movement. So for those of you with investments and savings, and if there are retirees who are also on this call because they couldn't make the previous one, I would say this: it's certainly worth just considering having some exposure to some shekel income, simply because obviously here the shekel versus shekel exchange rate is flat and it's always one. So if you're making some money in shekels, yes, you'll pay some tax, but there are some opportunities right now in the shekel space that there probably haven't been in a decade. So it's certainly, you know, if you're retiring, if you're not going to be earning any income in shekels at all, it's certainly worth considering having some of your investment exposure where relevant, and where possible, of course, in shekels, just to mitigate that exchange rate risk that you have, and your exposure to US dollar versus shekel and the movements. In terms of your Israeli investment options, also have to be very careful here with the PFIC thing we described before. All Israeli mutual funds, and a lot of the ETFs even that they use here, because they're structured differently, are PFICs and have to be avoided. So also you can utilize direct bonds, direct equities, some ETFs, but very, very few. Yeah, it's basically, as American citizens, you're paying tax anyway. It's just a question of to who. And the tax rate, it depends on where you are in the bracket as to whether or not the tax by holding Israeli securities is any more to you than the equivalent tax of holding US securities. So it's not something to be ruled out, and especially for people who will not have any other source of shekel income. tips for dealing with Israeli banks. I wish I had some, but the best I can tell you is everybody's experience is very, very different. They're very uncoordinated. In the US, if you went into Morgan Stanley in Chicago and Morgan Stanley in New York and Morgan Stanley in Dallas, you pretty much get the same service from the same types of people, and it's pretty uniform. Unfortunately, here that's still not the case. You can have a brilliant experience with one bank in one city and have an awful experience with the same bank in another one. It's just about the branch manager and their own little personal fiefdom and how everything works in that particular branch, which can be exceptionally frustrating. I always say dealing with Israeli banks is a real test of your Zionism. And unfortunately, it really is true. You do have to provide them with source of funds when you're sending over big money. I say big money is probably above $20,000, I would say, maybe even a little bit less than that. They'll want some sort of proof of funds. In general, if you're sending from your own original country, obviously it makes sense that an American is sending money from their own personal account in the US to their account in Israel after they made Aliyah. If you're sending bigger amounts, because you've sold a house or an apartment or whatever it may be, they may ask you for some proof of the sale, and you can send them the contract note or the a note from your acting solicitor or lawyer, whoever dealt with it, so that the bank is satisfied that the money is being taxed and has come from kosher sources. For those of you who want to open accounts on pilot trips, it can be done. It's usually like a $10,000 minimum. Some branches even $50,000 if you want English speaking. Especially because whilst you're still living in America, you'll need to be in a specific foreign residence branch, and each of the major banks have a few, mainly in the main population centres where you'd expect Anglos or foreigners to be, so Tel Aviv, Jerusalem, Netanya, Ashdod if you're French, and those sorts of places. They will be able to open an account for you, but be in touch and we can point you in the right direction. Just a quick bit about some kind of basic financial planning. Probably not a great slide to bring up in the middle of a pandemic. It's a little bit insensitive and I apologize, but the truth is, in general, we are all living longer. Advances in medical healthcare and medicines, etc., do mean that we are going to live, and we're continually projected to live longer and longer. I think this is from Morgan Stanley. If a couple get to age 65 together, on the left-hand side, you can see there's a 92% chance that one of them will reach 80, a 76% chance the woman will reach 80, and a 67% chance the man will reach 80. And if they're both alive at 65, then the chances that they'll reach age 90 is 50% that at least one of them does. And more than 1 in every 3 women, as you can see, 35% will reach 90, and almost 1 in 4 men will reach age 90. So you really have to plan for retirement. Once upon a time, people kind of worked till they were 65, and then they were usually dead by the time they were 80 or there or thereabouts. Now we all know people living well into their 90s. Sometimes even, we probably all know people here who've reached 100 and possibly even a little bit older than that. So it's a big fear of people to run out of money before you die. So having things in place is really, really, really important in terms of making sure you maximize your long-term returns. And especially for the people here who are in their 30s and their 40s, etc., you do have the ability to ride the roller coaster of the stock market, etc., and give yourself and your funds as much time as possible to grow and help fund a fruitful retirement. There is a little bit here on inflation, basically just to show how, even actual inflation is not really that relevant, because it kind of more depends on who you are and at what stage of life you're at. As you can see, older people, because they use mainly services which go up every year, nursing costs, taxis, etc. These are things where prices rise much faster than goods, buying things and everything, that we order from Amazon that's imported from China, etc. That's what keeps the average inflation low. But the older you get, the larger your own personal inflation is, and that's why staying in cash is a terrible idea, as your purchasing power erodes. due to inflation. For those of you who don't know what inflation is basically how much prices rise each year. So to use a naive example, if Starbucks are charging $1 for a coffee this year and they're charging $1.05 next year, then the inflation on that coffee is 5%. And they take a basket of 500 goods and TVs and sofas and chairs and whatever it may, and dishwashers and fridges and whatever, and then they see how the prices move, and then they come to an average inflation figure. But the older you get, the less relevant that inflation figure is, and the more important it is that your funds have been invested properly. In terms of using legal structures for portfolio management, we do use trusts in Israel, but not really. It's a fledgling industry here. It's not really used anything like as often as it is in the States. Definitely avoid Israeli insurance wraps. They will try and sell them to you, but for a US taxpayer, they're a disaster. For those of you who've got children under 18, there is a scheme here whereby they will match if you pay in 50 shekel a month to each of your child's, like a kind of child trust fund. The government will match it. Unfortunately for Americans, it's not particularly tax friendly, so you do have to watch out for that and consult with Aliyah or another local CPA here who's aware of how to make sure you can receive that benefit without it having a negative tax impact. Even it sounds ridiculous for 50 shekels a month, but it's just something to be aware of. Bottom line, be organized. It's important to do as much of the legwork as you can before Aliyah. Avoid those rookie errors, the PFICs for sure, those people who are going into Israeli jobs and the Israeli pension schemes. You definitely need to have a conversation with a professional before you start anything, because otherwise you really will leave yourself in a little bit of a pickle from a tax perspective in the US. Do invest your money. The younger you are, the more time you have. Obviously, I appreciate Israel is expensive, etc. But if you do have spare funds, make sure you don't just stick them in the bank earning 0.0 something, but you do put it to work for you. Finally, this is the last page of our slides. Ellie and myself, our contact details are here on the right. Please feel free to email us with any questions that you have. Both of us are on WhatsApp as well on our Israeli numbers, so you can certainly feel free to contact us that way if you wish. I do think in general email is the best way, and we're happy to answer any questions you have via email or to set up a call. Happy for you guys. If you want to raise your hand now, then we can answer a few calls in the remaining time that we have. Please obviously try and keep the questions general as opposed to specific. I'm going to pass back to Ari so he can kind of manage that, and also feel free to continue using the Q&A in the chat option to ask us any questions. Thank you very much for listening and for joining us on this public holiday.
Thank you so much to Ellie and Aaron for that wonderful presentation. And thank you for everyone who joined us today on Monday, Memorial Day.